Hello viewers, in this video I'll be going over the Dow Jones ETF ticker symbol DIA. Currently the market hasn't closed yet and we are currently down 24 basis points and we may close off around that level, and I do believe we may be heading lower. Reason why, as we can see on the 4-hour chart, on yesterday we were overbought on the RSI, as we can see down here, and I do believe we may drift lower and fill in the gap that we made over the weekend. Monday we gapped up and the bulls made a nice charge upward, and we are currently roughly around like 2.5% off the recent highs, so that may be a next target for the longs to take or the bulls to take on. But first, I do see we may drift lower. The first spot will be this price level that date back to March 19 and March 21st. So past resistance are now current support, and that coincides with the 18 moving average. And that movement or the price level is $260, approximately less than a percent move. And the next, on the daily MACD, we see a converging up after the nice push yesterday. So that is a point for the bulls. But for the bears, we do necessarily see that this gap right here has to fill, and that will be the next, I believe, support, or the 9-day moving average may coincide with where we left off on Friday. So we do have a large gap. The gap is roughly a percent different. Yeah, a percent different. And on to the next module. So on here I'll compare the current trend with this trend. This trend dates back to December 6th to September 8th, 2010. And I'll point out why these two charts are similar. So in the beginning of this chart, we see an uptrend dating back to January 22nd, all the way up. We also have an upward trend down here. This does make an upward trend for several weeks. And as we can see, back onto the current trend, after making several weeks of upward movement, we do see it slightly break down, touching the lower Bollinger Band, and we'll make another Bollinger Band as it touches it twice. In between, it touched the middle Bollinger Band, and this will be purple. And after having two instances where it touched the bottom Bollinger Band, we do see it touching the upper Bollinger Band, and that will be green. And we can mark that same action down here. After a long week of upward trend, it gave up and touches the bottom Bollinger Band, not once but twice down here. So we see that action here, and we also see it made a slight attempt of touching the middle Bollinger Band. So after hitting the bottom Bollinger Band twice, it looks like it may attempt to hit the upper Bollinger Band, but not quite. But we may take a guess that it may happen in this part of the trend. So what I have here is, since these two trends are identical, reason being they may have possibly the same outcome. So let's check the projection model. So on here we'll go day by day, where the trend that we took a look here will head to in the next coming days. Currently this is day 0. This is 1 day out, 2 day out, 3 day out, 4 day out, 5 day out, 6 day out, and 7 days out. So currently, or the trend that we just took a look at was December 6th to September 8th, 2010. And back then, DIA, or the Dow Jones, was up 1%, or to be exact, 92 basis points. And that is about it. If you enjoy this content, feel free to like, subscribe, and thank you for watching.